Good morning or good afternoon, everyone, depending on where you are in Australia or even around the world as well. My name is Joel Comerford and I am your Lawpath webinar host. Welcome to today's topic, the tax effective ways to buy motor vehicles through your business. Now, before we get kicked off, I just wanted to check in with everyone, get a bit of interaction going. How's everyone's day so far? Some yeses for good, some nos for bad. If you are new, you can go ahead and drop in hi, for example, and yeah, welcome. Christopher, Ross. Oh, I love it. Good, excellent. Nobody's having a bad day. That's good. Beautiful, excellent. Yep, keep them coming, guys. Keep them coming. So, first off, thank you for taking an hour out of your day to join us. We know business owners have no shortage of to-dos, so we'll make sure this time is well spent. For those who may be new to Lawpath, let me give you a short version of who we are. Over the last 10 years, we've helped over 600,000 Australian businesses set up, stay compliant, and grow. Our model is subscription-based because business owners like you need ongoing support, not unpredictable hourly bills. We like to think of ourselves as the smarter, simpler way to handle legal, accounting, and tax, giving you certainty and affordability at the same time. Now, on to today's topic. Being a business owner often means balancing ambition with pragmatism. You want to grow, expand, and keep moving, but you also need to do it in a way that doesn't hand over unnecessary dollars to the taxman. And cars, well, they sit right at the crossroads of necessity, compliance, and opportunity. The way you buy or even use a vehicle in your business can dramatically affect your tax outcome. Now, do you buy outright, finance, or lease? What deductions can you actually claim? And how do you keep the ATO happy while still maximizing value for your business? Those are the kind of decisions that, if done right, can save you thousands. If done wrong, they can raise red flags you'd rather avoid. That's why this session is so important and why at Lawpath, we make sure you've got the expert advice on tap, not just when something goes wrong, but proactively, so you can make smart decisions up front. I'm very pleased to introduce our speaker today, Pradi Hamid. Pradi is a chartered accountant and senior advisor here at Lawpath Tax and Advisory. He's passionate about using technology to help SMEs unlock their growth potential, and also with experience across private SMEs, multinational corporations, and the banking sector. He knows how to translate the complexity of tax into clear, actionable strategies for business owners. Now, today's session, what will Pradi be covering? How to structure vehicle purchases, so buy, lease, or finance, what works best for your business, which deductions you can claim, running costs, depreciation, and what the ATO really allows. Record keeping essentials, so from logbooks to receipts, what's needed to substantiate claims. GST and Fringe Benefits Tax Implications, so how they apply when a vehicle is used for business and private purposes. Common pitfalls to avoid, overclaiming, poor documentation, and misunderstanding private versus business use. And then at the end, we will have our Q&A. So, bit of a disclaimer for everyone. I know I'll probably repeat this a couple of times throughout the webinar, so just bear with me. For anyone who is new, this entire webinar is recorded. We will upload this episode to our YouTube channel. If you type in Lawpath on YouTube, you'll see every previous webinar we've ever done. It's likely something that you're dealing with is on there, so you can review it. But obviously, throughout the years and months, government does make changes to legislation, and there are rules that change within the legal and accounting scheme. So it's always good to stay fresh and always enjoy these newer ones as well. And if you guys ever have any questions, I will be sending an email at the end of this webinar. The email will have all the slides from today, information on what we've covered, contact information for Pradi and our other accountants and lawyers, the YouTube link, as well as partner offers and discounts. So if anyone is interested in considering some of our plans for their business, which I will go into later, you are privy to discounts because you are participating in this webinar. Not everyone else gets to take advantage of this as well. So I will mention this later. Now, throughout the webinar, if you do have some burning questions, you can chuck it in the chat. But if you do have some questions that you're happy to wait till the end, we will have a Q&A, and Pradi should be able to answer all those questions for you. But that's usually, yeah, that's usually the gist of everything that we need to cover throughout the webinar checklist now. So I'm going to go ahead and pass it over to Pradi, and thank you all so much for taking your time out today to sit with us.
Good afternoon, everyone from Sydney and all over the country as well. So basically today, following on Joel's point here, I would like to go through all the materials that you just need to keep an eye on, especially in purchasing a vehicle for your business, personal name, what sort of kind of methods or options that you want to pull that trigger on, but most importantly, how to stay compliant and minimize your tax at the same time as well. All right. So the first thing that we'll discuss here today will be on the method of all the various different options that we need that you do have available. Whether you want to pay outright, whether it's cash or loan, lease options, novated lease, as well as claiming it under your personal name through the business versus private portions, which we will discuss shortly. All right. So what are the implications when it comes to the options right here, right? 3 things that you just need to keep in mind. If you want to buy the car outright, whether that's through cash or finance, one thing that you just got to keep an eye in here is that the upfront costs that you need to consider. Whereas the opposite of that will be the lease options. The lease options will be the more sort of kind of attractive option, especially for those who recently started the business, because of the low sort of kind of investment that you need to invest at the start, right? Whereas on the finance side of things, this is something that you can actually sort of kind of play around with. You may need to put down a little bit more deposit upfront, and the rest through the loan repayment. And one thing that you just got to keep in mind here is that how would you like to spread out your initial investment on that, all right? Because one of the main questions that we normally go through with a lot of our clients here is that, is it better for us to buy it outright, lease or finance? So it all depends on your cash flow and personal situation as well on that. We'll explore this discussions in the next few slides as well. So who should own the vehicle first and foremost, right? There are 3 other options in this sort of kind of ownership right here, okay? So first and foremost, if you buy the vehicle through the company, okay, please make sure that from the transactions, documentations, everything needs to go through the company's bank account, company's APN, to ensure that you'll be able to claim it within the company. What are the benefits of this? So if you buy the vehicle through the company will be able to pay all the expenses throughout the year. But most importantly, you'll also be able to claim the various different GST credits that you can claim back as part of that purchase. One thing you just got to consider here, any private use portion of the vehicle will trigger as an FBT, or what we call the Fringe Benefit Tax. But most importantly, you need to hold a logbook when it comes to this. Second option is you can own the vehicle under your personal name as well. And the other sort of kind of options that we can explore here is that when the directors own the vehicle under the personal name, they can also reimburse that through the business as well, okay? By doing this, you'll be potentially avoiding the FBT. That's a lot more flexible, free to use, right? But the only thing that you just got to keep an eye on here is that there are only very limited amount of deductions in your individual tax return that you can claim in this, right? Last but not least, a novated lease options is basically an agreement between the employee, the company, and a third party lender. Think of it that way. All right. From the employee perspective, this is a lot more tax effective. All right. But one thing that you just got to keep in mind as well, FBT will still be applicable if there are private use of that vehicle as well through the business. So, what are the few things that you need to cover yourself off when it comes to this? You need to ensure that there are clear structure in terms of the ownership of the vehicle, whether that's under your personal or under the business name. Going back to my earlier point, ensure that all paperwork, invoices, contract, if you buy it through finance, it's determined based on the personal or the business ownership. Most importantly, logbooks. This is one thing that I will repeat over and over again, because in order for you to maximize your deductions on this, logbooks will be the most important documentations that you need to hold of, as well as the receipts, any sort of kind of insurance, and various different supporting documentation as well under the business name. Last but not least, determining the accurate allocations for the cost of your expenses throughout the year is crucial as well, because there are several expenses that you can actually claim as part of your GST credit from the ATO based on the business use proportion and the consistency between the year as well on that. All right. So what can you actually claim in terms of the vehicle expenses throughout the year, right? Similarly, running costs is the main sort of kind of expenses that you can actually claim here, right? It's crucial that for you to keep a hold of every single receipt for all these expenses. We're talking about fuel, we're talking about service, repairs, registration, insurance, including STP, right? Or any comprehensive insurance based on the ownership of the vehicle. If there's any other, if you buy the vehicle through a finance, bear in mind though, you can only claim the interest component on it, not the principal amount. This is one of the main sort of kind of misunderstanding that we normally go through with a lot of our clients. But most importantly, depreciation needs to be calculated based on the cost of the vehicle. And there are some certain car depreciation limit that we will need, that we will be able to discuss as well on this. Furthermore, there is another tax mechanism that you can still take advantage of, which is what we call the instant asset write-off, right? So the instant asset write-off is it's basically a quite a powerful tax strategy that you can actually take advantage of by instantly writing your asset that financial year. Okay, so traditionally, when you buy a vehicle to the business, prior to the instant asset write-off scheme, you can only claim the depreciation method on that, right? But for FY25, the threshold for the instant asset write-off is $20,000 per asset or per vehicle in this particular cases. So what does that mean? If you're looking to buy a vehicle, or if you bought a vehicle last financial year within this threshold, right? You'll be able to instantly write this off in your company tax return so that it will actually reduce your taxable income even further, all right? Bear in mind though, the write-off is only available for vehicles below that threshold, right? And you can actually claim multiple assets as well out of this. So if let's say you're looking to buy a vehicle for $17,000, right? You can actually claim multiple vehicles on that, right? And these are the kind of things that we normally go through with a lot of our clients throughout the year in order for them to be prepared in terms of what they can actually manage to claim. Not only for the past financial year, but most importantly, for the future and their tax planning strategy as well on that, right? Moving on from this, we just want to explore the depreciation, the depreciation options as well on this, right? So if your vehicle is above the instant asset write-off, depreciation must be claimed over its effective life. So what does that mean? Usually, when you buy a vehicle, the typical useful life of a car or a motor vehicle is around 7, 8 years. All right. And there are two methods that you can actually claim this. You can use the prime cost method, a straight line, where every single year is a similar deductions that you'll be applying. Or you can also opt it for the diminishing value, the diminishing value method, which means that you can actually claim a little bit more in the early year of owning that vehicle as well. Okay. Bear in mind, there is actually a car depreciation limit for this financial year, similar to last year, which is around that 69, just below that 70,000. Okay. So any amount paid above this threshold, you cannot be depreciated or claim any GST against it. All right. And this only applies to passenger vehicle designed to carry fewer than 9 passengers and less than 1 ton payload on this. Right. Now, one tip that I just want you to keep in mind when it comes to this, ensure that you keep hold of the documentations when it comes to original purchase price, invoice, whatever that might be. Determine what sort of kind of depreciation method that you like to take on, and most importantly, logbook, because you will need to get the logbook in order for you to determine the business use ratios to claim between the private versus the business purpose as well on that. Now, I just want to have a bit of a pause here because I understand that we've got a few questions that came through. And I think if I just go all the way to the top, let's have a look. And we started with Renan right here. You will be understand the key incentive of vehicle, especially on FBT. Oh, not sure if we will cover this, but yes, we will cover the FBT part later on during this presentation. Another question from Gabriel in relation to director's loan, division 7920, component, but did not find it there. I should be in our YouTube channel as well on that, Gabriel. Do the logbook needs to be maintained throughout the year or just 12 weeks? In short, you just need to hold 12 weeks. And I will explain in terms of a few other things that you need to keep an eye on as well. Do we get a copy of this? Yes, as per Joel mentioned earlier, all of our webinar will be recorded. Logbook only need for 3 months. Thank you for that, Melissa. And another question for Shab. If we have a business fuel card, do we still need to keep individual receipt or is this monthly statement sufficient? Receipt will be best, right? It's better for you to actually overfile. So the more you can actually substantiate your expenses, the more that you can claim as well on this. Similar logbook for 3 months a year or 3 months, do it once, that's it. So in short, you just need to keep a logbook for 3 months and you need to replace it within 5 years. And I will discuss that later on. Can the company exclude the private use portion of the car expenses to avoid fringe benefit implications? Short answer is yes. As long as you get the hold, as long as you hold the logbook there, Gia, okay? Please ensure that whatever the business versus private use will be determined based on that logbook usage as well, right? I think that's. Oh no, sorry. See a few more from Abir. Can we claim across 2 years for vehicle over 70K? Short answer is no. Can we not depreciate over 5 years? Look, depending on which sort of kind of type vehicle you are, but ordinarily we would only claim a new vehicle around that 7, 8 years mark, basically on that. Another question from Shane. If a vehicle is used for mixed private use, business use, is the mileage due from mechanic regular service claimable or partial? And oh, very good questions on that actually, Shane. So in short, when it comes to that, right, the ATO generally assess the deductibility based on the connection of earning assessable income. Okay, so therefore, the ATO may consider travel to and from mechanic, service center, or repairs as an incidental to the business of this vehicle. So therefore, this will be treated as business-related expense. Very good questions on that, Shane. All right. I have an EV that I charge using my EV charger at home. How do I claim expenses for that? Yeah, so similarly with the electric vehicle, it's still a bit more complicated. But the main sort of objectives, the main sort of rule here is that always keep a hold of the logbook. There are specialized sort of proportion as well that you can claim on. And yeah, we'll be able to provide you with this specific answer shortly after this webinar. And if you run a hybrid business, but register office is home, can you claim travel to the office for the days you are in? Short answer is no. Okay, we are caught up and we are back on track. So choosing the right methods, all right? There are two methods that you can actually claim the motor vehicles through the business: the cent per kilometer method and the logbook method. Yes. So it all comes down to your usage. It all comes down to pretty much of that, right? If you want a more straightforward method where you don't need to keep hold of the receipt, you don't need to basically, do a detailed logbook or anything like that, the cents per kilometer method is a lot more straightforward. Okay, and from the ATO perspective, this is quite a generous offer as well. So in short, you'll be able to claim 88 cents per kilometer that you travel within the year. And this more applicable for someone who runs a solo operations and have a low usage of the business vehicles as well on that. Right? Secondly, when it comes to the logbook, this is ideal for businesses who use a high usage of the vehicle as well, right? Because the difference with the logbook is that you'll be able to report every single expenses from your fuel, parking, tolls, repair, maintenance, insurance, and everything like that. And then we'll be able to proportion the business versus private use. And you only need to keep a hold of the logbook every, you need to keep a hold of the logbook for 3 months. And you must update the logbook every 5 years. This is the main sort of things that you need to keep an eye on, because a lot of our clients usually missed out on the last part on that right here. All right. Moving on from this, how do you actually substantiate this? That is pretty much when it comes down to it, right? So when you use the logbook method, you are required to use the most accurate tax deductions in claiming the business use of the car, right? So how it works is if you have all these expenses that you go through your bank account, ensure that you code that against your motor vehicle expenses. And then at the end of the financial year, we'll be able to assess what are the proportion of the business versus private use, and you'll be able to claim the business proportion as part of the deductions in your business. Okay, so $1 million question is what to record in your logbook. The date is crucial, odometer reading, the purpose of the journey. So yeah, this is where you'll be classifying the business versus private use, the distance that you travel, and most importantly, the opening and closing odometer reading for the end of that 12-week period. But the only thing that you just gotta keep an eye on here is that, look, long gone are the days where you just actually write down everything in the, in the actual physical book. Due to the latest technology that we're gonna take advantage of, the ATO actually has their own app where you can actually use the what we call the My Deduction or the logbook template in there. Everything is GPS tracked. So using the example that we have provided here for you, you'll be able to determine whether each and every sort of trip that use the vehicle is business or private. And using this example, the the business use of the vehicle is 70%, right? So if, let's say, your motor vehicle expenses for the year is 10 grand, 7 grand will be deducted. The other 3 grand will be classified as part of your private use, and FBT may apply when it comes to that. And we'll explore that a little bit more at the end of the slides. Yes, indeed. So record keepings are crucial when it comes to this, right? So as per usual, in order for you to claim any sort of kind of deductions, receipts, and tax invoices are the main go-to supporting documents when it comes to this, right? Because when it comes to motor vehicle as well, one of the other things that we would normally look at here is the GST treatment of each and every of those expenses. Because if GST apply in those expenses, you'll be able to claim that back from the ATO. And if there's no GST applies within those expenses, there's no effect in your financials as well on that, right? For some of our clients who use multiple vehicles through the business, you can also use the fleet management reports. The report using summarize the data, maintenance schedule, cost breakdown, and the actual usage to support your deductions for the company. Thirdly, going back to my earlier point in relation to the GPS tracking, everything will be digitalized these days. So as long as you do have some sort of kind of system that generate these logs automatically, yes, you'll be able to use that as part of your supporting document as well on that. Last but not least, any diary notes or rosters can often be used as an additional sort of kind of documentations when it comes to this. So if you have, for a lot of our, say, NDIS clients, you have a weekly client visits, or for a lot of our clients who are in constructions, they have a certain set of site inspections. We'll be able to use this. We'll be able to use your calendars or any your rosters to support any usage claims when completed completing your logbooks as well, and when you don't have any logbooks maintained throughout the year, as an example. Right. Another pitfalls that you need to keep an eye on here, you cannot just simply solely relying on your bank statements to justify use. So this is one of the main things that a lot of our clients misunderstand when it comes to this. Time and time again, logbook, you will need to read your logbook every 5 years, right? You just need to hold it for 12 weeks, but every 5 years you need to update it, okay? And do not estimate trips or fabricate any sort of kind of fake trips or anything like that, because ATO normally scrutinize any pattern that seems overly consistent or to convenience. And they do have the estimated figures without any substantiating documents. That's the only thing that they need to avoid here. And most importantly, if you want to claim 100% business use, you need to ensure that you do have all those supporting documentations in order for you to stay compliant. Because once you start claiming this usually triggers an ATO red flags, and that will this is something that the ATO will look a little bit further at. Okay. I want to have a bit of a pause again because I think I noticed there are a few more questions that came through. Where are we? Right here. I think we'll be starting with Christy. Should staff be claiming the 88 cents per kilometer from the business, or is that claim as a personal tax deductions? What the pro and cons? In short, if you are claiming the 80% K deductions, it will be more applicable to your personal tax deductions. That is correct. If you run a business that has that higher usage, it'll be better for you to keep your logbook on that. From Tony. Glad that we have you in the webinar here today, Tony. Off topic, how long do you know? How long now do you need to archive paperwork now? Well, in short, in order for you to in order for you to lodge your FY25 tax return, we just want to make sure that you backdate all the invoicing, make sure everything's recorded to avoid any sort of kind of hustle when it comes to your tax time on that. Sajiwa asks about can we maintain logbook from last 12 weeks if we miss to keep the logbook from the initial purchase date? For example, 1 year ago. Yeah, look, you cannot backdate a logbook because yes, that goes back to that same principle where you cannot actually estimate without any without any proper substantiation. So therefore, it's better late than never. Just start it off now as part of your 12 weeks, and yeah, we can still use that as well. When the vehicle is under the company, only the personal use to be noted and paid by the director. Is that correct? No, maybe when the vehicle is under the company, only the personal use to be noted and paid for. Oh, no. Okay. So just to clarify on this, Gopi, when the vehicle is under the company, in short, you will need to proportion the business versus private use. So not only the personal use, you will only need to record the actual business usage of that vehicle in order for us to determine what is the proportions on that. All right. So normally we advise our clients not to claim around the 80-20 or 90-10, right? Those are usually the safe sort of kind of proportions that you need that you can implement. But yeah, going back to the previous points that we've discussed here today, substantiation, supporting documents are key when it comes to claiming this. Right. We are caught up with all the questions. And we can start moving on to the next thing, was yes, GST and FBT. So first and foremost, let's talk about GST, right? So in order for you to claim GST, it all comes down to your GST registration. That is pretty much what it comes down to, right? So if let's say you buy the vehicle through the business registered for GST, you'll be able to claim the GST as part of your tax credit from the ATO, right? But then again, going back to that logbook proportions, you might apportion the business use percentage, for your GST credit. And most importantly, time and time again, invoice, receipt, contract needs to be recorded as well on that, right? Bear in mind that, yes, one of the car depreciation limit that we've disclosed earlier applies on this. So GST can also be claims based on that car depreciation limit as well on this, right? Moving on from this, right? So what are the things that you can actually claim on your running costs when it comes to GST? Fuel, straight out of the bat, will be the most common sort of kind of example that you can actually claim on this. Repair and maintenance, any parts, any sort of kind of fixes, roadside assistance. If GST apply, yes, you'll definitely be able to claim that. Insurance and registrations can only be claimed if the GST component on eligible premiums, like your comprehensive of third party. State registration fees, if they include GST, depending on the state charges. Stamp duty, more than likely you want to track any GST on that, all right? Similarly with the lease payment as well, the GST credits can be claimed on lease installments if the lease is taxable supply, not input tax on this, all right? Yes, but ensure that the lease is structured correctly so that you don't actually, but it's not considered as a loan or a hire purchase agreement. That's the only thing that you just gotta keep in mind, all right? But yeah, similar in claiming any other expenses, generally as part of your deductions of the business. You just need to keep in mind that every single thing that you're claiming here for, there needs to be a receipt, invoices, whatever that might be, because for every single expenses that you actually pay through the business, you would normally have the subtotal amount, the GST, if there's any, and the total amount that you need to pay. So this will be your source of truth document. Think about it that way, right? So if you're not sure whether, I'm not sure if my insurance has any GST, I'm not sure if my, if I buy the vehicle through finance any GST or not, always goes back to your receipt, invoice, because time and time again, that will be something that we repeated with a lot of our clients, that this will be a soft truth, because you must apportion the GST claim based on the business use on that logbook percentage as well on that, right? Moving on from this, yes, FBT. Okay, now one of the main sort of kind of misunderstanding that a lot of our clients usually assume here is that, oh, when FBT is triggered, that means I get to pay this personally, right? Now, FBT, or fringe benefit tax, is the additional liability, the additional tax liability that the company needs to pay out of the profit usage of the of that vehicle. Okay, so yeah, one of the examples that I've provided you earlier. Let's say if you have that 70,000, if you have that 10,000 running costs, 70% business use, 10% private. That 70% you'll be able to claim. That 30% FBT may apply when it comes to this. Okay, because when it comes down to it, there are two ways for you to calculate your FBT, right? The statutory formula, where you use a flat 20% best value. Similar to the cents per kilometer method, this is a shortcut for you to simplify your FBT calculation, right? But if you want actually to maximize your deductions and limit your FBT on this, right? You can actually go through. You can actually use the operating costs based on the actual business versus private use, and time again, you will need a logbook when it comes to this, right? So, how are the ways for you to reducing or avoiding FBT when it comes down to this, right? So one of the main thing that a lot of our clients are claiming here is, oh yeah, I use the truck 100% business use and everything like that. But if you park the vehicle at home, at your home garage and everything like that, it's quite difficult for us to claim 100% business use on that, right? Because yes, you will need to implement a policy limiting private use when it comes to this, right? So for a lot of our clients in constructions, if they park the truck in the business premises after hours, you can support this as part of that compliance for that 100% business use, right? Always maintain a logbook. This is one thing that we will repeat time and time again in order for you to maximize your operating cost method, right? And one of the things that you'll be able to do as well is that you'll be able to choose any vehicle that are exempted for FBT, right? So some dual cap use, similar vehicles may qualify for FBT exemptions, right? If only used for the limited private travel, and you could also have any sort of kind of reimbursement as a private travel costs, and this will be considered at the end of the year to reduce your avoid FBT altogether when it comes down to that. Okay. One thing you just got to keep in mind when it comes to this, even a low value fringe benefit needs proper documentations based on the logbook requirements as well when it comes to that, right? Right. So yeah, moving on from this, yes, the most common compliance pitfalls that a lot of our clients are experiencing at the moment as well, right? When you are claiming 100% vehicle expense without valid documentation, right? So yeah, going back to my earlier point there, the ATO requires records, and we're talking about expenses, we're talking about invoices, receipt, logbook, original invoice contract, in order for you to basically not only maximize your deductions, but also stay compliant to ensure that you are free of the ATO risk audit as well on that. All right. even if there is minor personal use, this must be excluded as part of that business claim as well. Because yes, time and time again, we can see a trend where you want to sort of kind of overstate your deductions. The ATO have a certain sort of kind of red flags within their system as well, based on the industry, based on your sort of kind of professions. And if you are overclaim any certain deductions, not only from your motor vehicle expenses, this will trigger a risk of audit, which is the last thing that we want to do right here, right? And yes, incorrectly claiming your GST. This is the most common pitfalls that a lot of our clients are experiencing as well. In order for you to avoid this, one of the main things I've discussed earlier, always use your invoice or receipt as your source of truth to understand each and every transaction, so whether GST apply or GST free on that. And do not claim depreciations above that cap limits that we've already mentioned before. Last but not least, poor documentations is another pitfalls that you definitely want to avoid, right? Missing logbooks or will be the main sort of kind of detrimental factors for you to miss out on your deductions. Failing to retain any tax invoices, because it's crucial, because every tax invoices will have will consist of the supplier name, ABN debt, and the GST treatment of that transaction. So therefore, in order for you to maximize not only your tax deduction but your GST credit as well, retaining your tax invoice is crucial when it comes to this. And last but not least, yes, time and time again, we want to ensure that you have consistent records when it comes to your invoicing or any other supporting documentations in order for you to avoid any sort of kind of audits or any disputes in the future. Right. Following on as well from this, yes. One thing that a lot of our client asks here is that, yes, I've got the vehicle under my business name parked at home. So therefore, every single time I travel between home and work, I will include it as part of my business portion. Unfortunately, that's incorrect, because when you travel from home to work, this is considered private in nature. So therefore, this will actually increase the proportion of your private use as well on that, right? Secondly, using business vehicle on weekends for errands must be logged as a private use, or you can actually exclude it as, or you can just simply reimburse it out of the company. And following on as well from this, assuming that all driving a business-owned car is very risky in order for you to claim that, right? Because if you have a vehicle that you park at home and you're claiming as 100% business use, even with a logbook, from the ATO perspective, this will trigger that risk of audit as well. And this is basically where it comes in to advise you in terms of what is the more sort of kind of reasonable proportions that you can apply within within that proportion as well throughout the year, right? When it comes to assessing FBT exposure, yes, this all comes down to the company. It all comes into the company's liability. That is one thing that I just want to emphasize here as well, right? So if you have a company and you provide a vehicle to your staff, ensure that you assess the FBT exposure as well on this, because failing to calculate or report FBT on vehicles with the private usage of it can result in underreporting of the FBT. And the last thing you want to do here is that you need to backdate your lodgements, pay whatever interest penalties that may apply as well on that. And yes, not keeping evidence of restrictions, or for example, like your private use policy, can increase this exposure as well of miscalculating your FBT as well on that. So how do you stay compliant? Yes, it's all about consistency. All right. So from the beginning of this discussions, we talk about the receipt, we talk about the invoices, we talk about the logbook. Definitely take advantage of all the available resources, technology for you to stay compliant on this. These days, it's a lot easier for you to set up everything to your accounting software, to upload everything to, upload all the invoices as a soft copy, everything to your software. So that when it comes to tax time, everything is ready to go. So you don't need to scrambling around for receipt, invoices, as long as you keep this consistency throughout the year. All right. Going back to our points, well, logbook is crucial when it comes to this, because in order for you to maximize your deductions, yes, logbook is crucial for you to determine what is the business versus private use on that. All right. So just to recap here as well, towards the end of our webinar, there are a few vehicle compliant health checklists, just to summarize of what we discussed here today. All right. So what is the ownership of the vehicle? Is it registered on your business or an individual? It's crucial for you to determine the ownership of this. All right. Logbook is the one thing that will make or break your your compliance when it comes to this. But more importantly, in order for you to maximize your deductions, a logbook is a crucial factor in order for you to claim that. GST claim for the business use, right? Always refer back to the invoice, receipt, contract that you buy the vehicle from. And yes, time and time again, you need to ensure that you itemize your tax invoices for all deductions, including running costs, repairs, depreciations, and if there's any sort of kind of lease or finance repayment as well on that, right? And the type of the vehicle based on your business needs is crucial when it comes to this. And most importantly, have you assessed any private use that you need to report for the company's vehicle as part of the FBT exposures? And yes, clear policies on private use. Going back to my earlier point, if you park the business vehicle in your private residence, in your garage, yes, there needs to be a clear policies in order for you to actually proportion the business versus private use as well. Yes. One of the other things that you want to, one of the few things that you just want to keep in mind when it comes to this, update your logbooks every 5 years, reconcile the business versus private use, and then time and time again, all invoices are recorded, valid, and stored securely. Clarify the ownership structures, which I mentioned recently. And if there's any other concern, if you have any other doubt when it comes to this, always seek advice when it comes to the FBT positions. And that's where we would come in when it comes to this, right? Yes, definitely avoid all these things for you to avoid the ATO red flag. Claiming 100% business use with no logbooks definitely is a deal breaker when it comes to this. Yes, you don't have any invoices to support your deductions will be another thing that you definitely want to avoid. Private use of the vehicle without assessing the FBT, because yes, it can be significant depending on the usage and the running costs of the vehicle throughout the year. Exceeding the car cost limit for depreciations is definitely something that you want to avoid to prevent any audit in the future. And reimbursing private use without documentations is another no-go as well when it comes to this, right? So yes, we'll address. Yeah, I understand that there are a few more questions just came through here. So yeah, we'll just sum up on what are the key sort of points that as a business owners that I want you to keep in mind moving forward. All right. In short, if you have a more sort of kind of established business with significant cash reserve, it's better for you to purchase it outright, because you can actually claim the various different deductions when it comes to this, and even you can also claim the interest as well if you buy it through finance options. You'll be able to claim the GST proportion back, but most importantly, you need to keep an eye on the FBT implications when it comes to this. On the flip side of that, if you have recently just starting up, lease options the lease options will be a lot more flexible for you, because not only that you'll be able to upfront the lower deposit the lower costs when it comes to running the vehicle, but you do have the options to upgrade your vehicle as well within 2-3 years, 5 years, whatever that might be, right? And most importantly, you'll be able to claim the lease payments as part of your deductions moving forward. Similar to the first options, you can still claim the GST, but watch out on the FBT implications on that. All right. Hire purchase is similar with lease, but this will give you the asset ownership at the end. You can still claim depreciation, interest, and running costs, which is a bit of a combination of the last two options. But yes, always watch out on the GST claim when it comes to this, right? Therefore, always go back to your receipt, invoices, and FBT will be applied to every single of your options right here, all right? So yeah, when it comes down to it, it all comes into your cash flow, really, and what is your risk appetite, all right? Therefore, every single client's circumstances are quite different. And this is where we'll be able to, assist you in determining how will be best to structure this key investment of your business moving forward as well on that. Right. So to finally summarize here, based on what we discussed today, you just need to ensure that the structures that you want to buy your vehicles under is crucial in order for you to plan that moving forward. All right. Record keeping, time and time again, is the main sort of kind of risk control that you can actually implement in order for you not only maximize your deductions, but reducing the risk of any ATO audit in the future. All right. FBT, keep an eye on the FBT, because you need to have a look at your private use portions within that logbook period, that 12-week logbook period. Okay. The structure of the vehicle purchase will determine your deductions as well on the year, right? Because whether you're buying it outright, whether you lease the car, or even if you use a hire purchase as well, each options impacts how you can claim the depreciation and the running costs as well on that. Last but not least, if there's any other questions or any other things you're not sure of, you do have an expert through us here. Please feel free to let us know if there's any other questions that may pop up in your head after this webinar. Joel and I will be more than happy to come back to you and provide you with an answer when it comes to that as well. Right. So before we move on here, I think let's just go through a few of the questions before I pass it back to Joel. All right. So I think we were up to Wayne, I think. Yes. Are 100% of interest costs on the finance car worth more than 70 claimable in the logbook method, or does the maximum car value only apply to the capping depreciation? If I could do some interest on the car, is it all claimable? So to answer your question, the interest will be deductible. The depreciations, you can only claim up to 70K on that way. Okay. What if you work from home? Is driving from home to a client or supplier back, is that business use? In short, yes, Remy, that will be considered as business use. Thank you. If you're reimbursing the company for private use, do you reimburse at actual cost, logbook percentage, or do you reimburse at 88 cents per kilometer per hour? So in short, you'll be reimbursing based on the actual cost on that. as part of that reimbursement. Question from Fiona. If you run your business from home but are contracted on a permanent basis, this is considered business use between your place of business home to the customer. That is correct, right? So with this sort of kind of running costs for your home office, more than likely it'll be a lot more tax effective if you actually claim it in your personal tax return, because more than likely your sort of kind of occupancy cost, your rent, anything like that will be under your personal name when it comes to that, right? 2-ton vans are 100% business use, aren't they? A short answer is yes. What key information need to be captured in the logbook spreadsheet? Date, time, distance, travel reason. So to answer your question, Sajiwa, I mentioned earlier that you can actually just download the ATO app, which has the logbook functions on it. Everything's going to be automated. You just need to enter the date, and the app will track your GPS movement, and you just need to classify whether it's business versus private use. Is insurance a deductible cost, and is it professional? Your answer is yes. It's a deductible cost, and yes, you'll be able to proportion it at the end based on the business versus private use. Another question from Fiona. If the vehicle is purchased by the directors, can the business rent the vehicle of the directors? Yes, you can have this sort of kind of arrangement as well, right? So the best way for you to do it is to set up some sort of kind of loan agreement, just to be safe. So it's further support your documentations, and set a sort of kind of monthly charge as well on that. Questions from Ruth. I manage the business, but sometimes have to work if staff's unavailable. This includes travel component paid. So do I exclude this as I'll be claiming vehicle costs? No. If you actually travel to attend that shift, or to attend any sort of kind of work related that directly connected to the business earning as accessible income, yes, you can actually claim this as part of the business proportion. Questions from Oscar. Will registering the vehicle under personal or under the company affect the registration costs and claim? Short answer, yes. Based on my understanding, the stamp duty might be higher if you actually register under the company. Insurance might be a little bit higher as well on that. So yes, that will have significant impact on that. So we caught up with the questions. Thank you so much for your time this afternoon, everyone. I will pass it back to Joel. But yeah, going back to my earlier point, any other questions that popped up after the webinar, we'll be more than happy to come back to you as well on this. Over to you, Joel.
Thank you so much, Pradi, and thank you everyone who's stayed with us this long. Now, for those of you who have been with the webinar or with our webinars or have sat through them, you probably know what this part's about. It's usually where I offer our services. So if you felt like the information you received from Pradi today was just the kind of information you'd like to have, and on an ongoing basis as well, then certainly this is the time to advise you on our plans. Now, for everyone listening, here's the key takeaway. Getting the structure of your vehicle purchase right can save your business thousands, but only if you've got the right accounting and tax advice behind you. This is exactly where Lawpath's accounting advice and tax plans come in. So with the accounting advice plan, which is $1,668 per year, so single payment, unlimited access, or if cash flow is a bit of an issue at the moment, $537 per quarter, you will get access to someone like Pradi, or you can even have Pradi essentially. What you'll get within these plans is unlimited 30-minute consultations with a senior accountant whenever questions pop up. You get on-demand support for vehicle structuring decisions, buying versus leasing versus financing, as well as anything else related to your accounting needs. Strategic advice on maximizing deductions like depreciation, fuel, insurance, and running costs. Guidance on record keeping, logbooks, receipts, GST claims, so your compliance and is essentially never overclaiming, for example. What I'm focusing on specifically is the topic of today, but creating a new business and you want assistance with your bookkeeping, your payroll, your invoicing, GST advice, whether or not GST would be a good option for you now. If you're hiring your first employees and you want assistance on how to pay your employees through something like Xero or MyOb, for example, then perfect plan. You get unlimited calls for 12 months for 30 minutes a day. So whenever something comes, whether you're trying to do something out of reaction or if you're just proactive and you want to get things started right, you've just started a business. How much money are you pouring into this business? Obviously, it means something to you if it's a passion project or if it's something, it's something deeper. You don't want to work for the man anymore. You want to do your own thing. Do you want to start it off right? Do you cash flow may be low, for example? And this is why our plans are so affordable because we appreciate that you need assistance and you want to start things off correctly. Our tax plan is the bigger brother to our accounting advice plan. This one isn't a DIY where you're working with someone like Pradi, for example. It is simply, we will do all your BAS for you, we'll do your tax returns for you, we'll do your end of financial reporting, et cetera, et cetera. Now, we also have a tax plan available for anyone who is a sole trader. We call it a sole trader tax plan. That's about $1,500 per year. But usually the tax plan is, because you're attending the webinar today, 2,764. If you wanted to combine the accounting and tax plan together, we do offer an extra discount for those who are a part of the webinar. So you can have ongoing accounting advice plus all your tax and BAS done for $3,300 as well. Now, on the tax plan, as I mentioned, you get a dedicated tax agent handling all your BAS and annual returns, expert preparation on financial statements that align with ATO rules, automated reminders so you'll never miss a deadline, advice on minimizing benefits, fringe benefits tax exposure, ensuring your vehicle policies are also bulletproof, and peace of mind, obviously knowing your compliance is managed while you focus on running the business. That's basically what I would like to offer everyone. We do have our legal and documentation. If any of this is of interest to you or you feel like you want to know a little bit more, please go ahead and throw yes into the chat now, and I will prioritize contacting you after this webinar. And I guess we can just do a bit of a determining piece on whether or not our plans would even benefit you, but also if cash flow is a bit of an issue, but you do require our assistance, we can go ahead and have that discussion as well. Beautiful. And yeah, I guess we've got a little bit more time to answer any questions. So guys, just throw it in real quick. And anyone who does have a question that appears later on, maybe you're not able to conceptualize it now, I will go ahead and make sure that when I send the email out for you this afternoon, go ahead and chuck a question in there and we can have that answered for you by one of our specialists. Thank you. Pradi, I'm not sure if you answered a question from Mike Walsh. We understand owner working from home is liable for FBT except when the vehicle is in home form or provable storage like airport parking. Have we covered that?
Oh, no, thank you for flagging that, Joel. I'm not sure if Mike's still online, but I might need a little bit clarifications on it. So, are we talking about just on the home office expense on the motor vehicle expense on this? Because if we are referring to the motor vehicle expense, yes. If you, going back to my earlier example, if the car is parked at home, all right, and you use it on the weekend, you use travel, you use the car to travel from home to work, those will be considered under the private use of the vehicle. Therefore, those proportions will be considered as FBT. So to answer your questions, how do you improve this? If you have a separate dwelling that you can actually park the car in the office, and that can actually further substantiate that the vehicle will be 100% business use, And the only way for you to avoid the FBT is, yes, by claiming 100% business use in your circumstances when it comes to this mine. Yes, indeed.
You know what, guys? I'd say that's just about everything. So thank you all so much for participating today and sitting with us for an hour. And your questions, the energy has been wonderful. Pradi, thank you so much for your guidance as always. I will send the email out with the slides and the YouTube episode link. And yeah, any further questions, or if anyone's interested in getting the ball rolling and actually getting some advice and assistance with their company or their sole trader business, please go ahead and respond to that email I send out. I'm more than happy to help you get acquainted with our team. Thank you so much.
Thank you, everyone.